All right, welcome back to the Investorhood podcast. I'm Sarah, and as always, I'm joined by Liam. How you going, mate?
Hey Sarah, doing well. And what a month it's been for the property market, right? June's numbers are in, and honestly, it's a bit of a record breaker across the board.
Yeah, it's wild. All 8 capitals posted gains between 0.2% and 0.6%. That's pretty rare to see them all moving up together. Adelaide, though, just keeps showing off, up 0.6% for the month and nearly 10% over the year. I mean, that's not pocket change.
Adelaide's been the quiet achiever for a while now. And Brisbane, can we talk about that? Median house price finally cracked the $1 million mark. That's a big psychological milestone for the city.
Yeah, and I remember my first property flip in Adelaide, actually. This was, years ago now. I picked up a little weatherboard place, did the classic paint and polish, and even back then, the growth was just steady. Not flashy, but reliable. That's what I love about Adelaide. No drama, just results.
It's interesting, because this time last year, the capitals were all over the place. Now the growth is really synchronised. I think a lot of that's down to the interest rate cuts we've seen. Just improved sentiment across the board. Buyers are feeling more confident, and it's showing up in the numbers.
Yeah, but do you reckon these gains are sustainable? I mean, it's great to see the momentum, but affordability is still a massive issue. And the pace is measured. No one's going nuts, which is probably a good thing.
I agree. The upturn's definitely more measured than previous cycles. There's still a lot holding things back. Affordability, high household debt, and, not everyone's wages are keeping up with these price jumps. But with another rate cut expected soon, I wouldn't be surprised if we see this steady growth continue, at least for the next few months.
Yeah, and I mean, even Melbourne's starting to recover. Up 0.3% for the month, which isn't huge, but it's something. Still not back at its peak, though, so it's not all sunshine and rainbows everywhere.
Just a quick note to our listeners, if you haven't already joined Investorhood, well, what are you waiting for? Each month, you'll connect with new people in your local area who are just as into property investing as you are. Share strategies, get expert insights, and take part in our weekly meetups or quarterly events. It's all about growing together with a community that actually gets it. Head to investorhood.com.au and join today. Speaking of not all sunshine, let's talk about the regions. They posted 0.3% growth in June and 6% year on year. That's still outpacing the combined capitals, which is pretty impressive.
Yeah, but affordability's biting hard. National house prices are up nearly $50,000 in a year. If you're a first-home buyer, you now need, $8,000 more for a standard deposit?
It's a real hurdle. I actually spoke to an investor recently who shifted from Sydney to Ballarat. They were getting squeezed out of the city, so they started looking regional, ended up with better rental yields, and honestly, less competition. It's not a silver bullet, but for some, the regions are still a good bet.
Yeah, I get that. The lifestyle appeal's still strong, and regional prices are up over 65% in 5 years. But I don't know, I worry that as more people pile in, the affordability edge is going to disappear. It's already happening in some places, Ballarat's not exactly a secret anymore.
True, but compared to the capitals, there's still value to be found. And with remote work sticking around, I think the regions will keep attracting buyers who want a bit more space and a bit less mortgage stress. But yeah, the days of the absolute bargain might be behind us.
And for first-home buyers, it's just tough everywhere. Even with government incentives, that deposit gap keeps getting wider. I mean, I've had clients who've had to get creative, family help, rent vesting, you name it. It's not easy, but people are finding ways.
So let's talk about what's next. The Reserve Bank's expected to cut rates again soon, which is giving buyers a bit of hope. But with prices so high and debt levels up there, I don't think we'll see a massive surge in activity. It's more of a slow burn.
Yeah, and on the rental side, growth slowed right down, just 3.4% over the last year. That's the lowest since early 2021. It's a bit of relief for renters, but it's not like rents are dropping. People are just, doubling up, moving in with family, or going back to share houses. I've seen more multi-gen living lately than ever before.
It's a sign of the times, isn't it? High prices, high rents, and not enough affordable options. I think the next few months will really hinge on what the RBA does and whether those rate cuts actually make a difference for buyers and renters.
Yeah, and I had this young couple recently, first home buyers, classic story. They were short on the deposit, but we managed to get them over the line with a government scheme. It's not a magic fix, but sometimes those little boosts are what make the difference. I just wish there were more options for people starting out.
Absolutely. So to wrap up, prices are at record highs, growth steady but not wild, and affordability's still the big challenge. Rate cuts might help, but it's not a silver bullet. Investors and first home buyers both need to be savvy and realistic.
Couldn't have said it better. All right, that's it for June's wrap. Thanks for tuning in, everyone. And remember, if you're not already part of the Investorhood community, now's the time to jump in.
Thanks, Sarah, and thanks to everyone listening. We'll be back next month with more market moves, insights, and hopefully some good news for buyers. Until then, stay sharp and stay connected through Investorhood.